This is our Forex blog for September 15th, 2011. And, like most days, we really want to buy the strong currencies versus the weak. The real-time currency strength is on the top in histogram form. Underneath that is an intermediate time frame, which it's a blend of multiple different tools and on multiple different time frames. So it's impossible to say exactly what the time frame is on this because it's kind of dynamic. You could have a downtrend switch to an uptrend in a half an hour, or if it's a more slow move up, it could take 2 or 3 hours. But nonetheless, it's quite a bit slower than the real-time bar-by-bar statistics that we have on the top. Underneath that, we have the daily, weekly, monthly. So obviously, if you see extreme strength in a currency that's strong on all time frames, it's a good deal to trade that one against one that's weak on all time frames. So starting the day off, you can see the Australian was weak coming into today, and the dollar was strong, and so was the yen. You'd want to be selling the Australian dollar and Australian yen. Here's the Australian dollar coming into today. You can see, it broke the hourly and fell, came back up and found resistance. You had many opportunities to sell this, and it fell about 50 pips. And normally, if a currency is going to continue to trend down, when it comes back up later and hits the hourly, it's going to find resistance there. It's not going to go above it. So once it broke above the hourly, this is why probably for close to 6 years we've been doing class, we talk about using the hourly moving average as a filter. Below it, look for shorts. Above it, look for buys. And, when a weak currency breaks above the hourly, it really tells you something. And you can see it shot up another, 75 pips from the hourly at that time. But in real time, the dollar was strong, the Australian was weak, and this one fell. You can clearly see the dollar did not remain strong. In fact, at 2, it became weak. Then it had another strength, about a strength. And from that point on, it's really pretty weak until about 9. And this one really wasn't that strong. You wouldn't necessarily go out and want to buy the Australian. There's better opportunities out there. In fact, the New Zealand's stronger than the Australian, so you wouldn't really waste your time trying to buy the Australian versus a dollar. The New Zealand would be better. The Swiss looks stronger. The Euro looks stronger. Those would be the ones that you'd be focusing on against this weak dollar. All right, so those are some trades you had earlier. Let's just take a peek at the Australian yen. Again, coming up to midnight for the first 2 hours, you can see this thing's been falling. It fell about 50 pips. There was plenty of opportunities to sell a pullback. Once a currency is in a trend, you wait for a pullback, you go short. You might have got stopped out of here with 8 or 10 pips. You went short again, you made 40. You're never going to have all of your trades work. However, when you're into trades that are in the direction of these momentum, typically if you lose the first time, the second trade is going to work for you. Again, the euro was relatively consistently strong throughout the day. However, the weekly and monthly trends down. So when you see strength in there and intermediate and daily trends strong, it's okay to trade it, but don't expect it to continue all day like this. And in today's instance, it did continue all day, but usually, most times, you might have strength for 1 hour to 3 hours, and usually no more than 5. So, that's really what happened here. You had strength for 3 hours, a little bit of weakness here, not much strength, and then the strength resumed. But the euro was one of the strongest ones. The Swiss was moderately strong. You don't have any perfect trades today because you really want to trade ones that are strong on all time frames versus ones that are weak on all time frames. So the Australian dollar sell and Australian yen sell, and even the New Zealand dollar and New Zealand yen sell earlier up until 1 was the highest odds trades, the one most likely to work. And you can see coming up to midnight today, it went down, rallied up, down, and then the trend, after 2 when the dollar stopped being strong, reversed. Here's the New Zealand yen, same exact thing, down. And notice how the Fibonacci area was there, the lower containment band. Usually price reverses at the 2.0 containment band. And if there's any major support level here, like a Fibonacci retracement level, it's even more so. All right, so pretty much from 2 onward until about 9 for about half an hour's strength, the intensity of the dollar was down. The euro was strong, so from 2 to really 12, you're looking for buys in the euro dollar. And first thing you look at this chart, notice at 2 o'clock it was underneath the hourly. It was just going sideways and it broke above it. So this is a pretty high odds trade right here, especially when it broke out over this little sideways rectangle pattern slash wedge pattern. And here's the next resistance area, the previous day's high, major resistance area, decent place to get out of your trade. And it looks like it went up about 50 plus pips. You might have bought this pullback right here, kind of went up, and then you would have got stopped out. You would have lost 10 pips there. You went long again. And you always want to draw your fibs on the previous wave because most times the first or second fib target is where the market's going to stall. So here it went right to the 1.382 fib target. We have a bunch of counter trend signals right there, and it's very close to the monthly S2 weekly pivot level, Fibonacci profit target level. Lots of areas up there likely to stall it, so decent place to get out. Now, because this one's up here right now, let me they're using the build your own histogram that I went over in class. I don't know what the settings they use are, but I'm going to try to find out because this looks really good. But at 9 o'clock here, or even earlier today, you can see incredible strength here. And there's lots of pips to be made. Even this little pullback that goes up here, you made 10 pips. If you bought this pullback right here, as it goes up, you can see there's no strength. At 9 here, off the chart strength. So basically, you'd want to be buying that pullback right here. Draw your trend lines over the down move. You get in there. Little sideways rectangle pattern, you get in here. Little pullback right here, you get in here. You might have went long right here and lost. You bought this next pullback right here, and you can see it's going up, and it doesn't have the strength anymore. But I thought this was pretty amazing, and I'm glad to see people are making money with the FX Build Your Own Trend tool. In his post, he said he was trying to sell the 3,900 level and lost here. Then he drew his trend lines underneath the range bars and went short here and made about 30-something pips, which is a very good way of doing counter trend trade. You never always, I don't know why he sold right here, because I wouldn't, because there was way too much strength. I mean, but, some people have more balls than me. I would, however, draw my fibs on this last wave. If it came up here and hit that fib target, draw the trend line underneath the lows there and short that. That was a good trade. The second one he took was good. And I think he said he made about 30-something pips, which appears quite easy to do. It pulled straight to back. But the range bars are very high odds, and they really take a lot of the noise out of the market. During this time right here where there's not much movement in price, you can have fewer bars and a lot clearer bars. What is this, from 6 to 9? Let's bring this chart back up here. 6 to 9, yeah, so this was what it looks like on a range bar. There were quite a few bars because the volatility was high, but you might have got into a trade right here, and as it went up, there was no more strength, so you had a chance to get out of that with a 3 to 4 pip win or break even or 2 or 3 pip loss. Give it a little bit more time, you might have bought right here because there really wasn't that much weakness, and again, it went up without that much strength. This trend line over the highs, if you visualize the trend line over these bars highs right here, when it broke out right here, it appears that you could have got into a nice little 40 pip move, and then again the pullback here and the pullback here, and because of the strength I would have bought this pullback here as well. I think we're approaching my Fibonacci profit target areas up there around 39.25, so decent place to look for a counter trend trade. So the dollar and the yen were weak. Yeah, the yen. So strong euro. You also have a nice euro yen trade right here too, and you can see this one also is hovering around the hourly, broke out, and this one was actually stronger than the dollar because it went above the previous day's high in the first instance here. So when it slightly went underneath it and broke back again, this was a high odds trade, and also when it broke out here, high odds trade. And our Intella stops do a pretty good job of keeping into the trade, and you can kind of use it as a system. When the stop gets broken, you get in, you follow this trailing stop up, and it looks like it would have got you out here at 106.78. Most people would probably get out at the Fibonacci retracement level. We have a trading zone high here. There's a weekly pivot, which is the average price of the previous week. The whole number is right there. Plus, it's way above the upper containment band, and probably the 3.0 band, which I don't have on these charts, but I do use them at home, would be somewhere around here. And price rarely stays above there. So this is a phenomenal trade too, that you would have got in a little bit before the 9 o'clock explosion.